Cryptocurrencies have captured the imagination of many, struck fear among others, and confused the hell out of the rest of us. Thomas Carper, US Senator. Cryptocurrencies are an internet-based medium of exchange where cryptographical functions are used to conduct financial transactions. In English, it's where we go online and transfer digital currency that is encrypted so only the sender and the receiver can read it. Bitcoin, a cryptocurrency, is like many others in that really it's just a network of peers who all have access to the exact same data. Everybody has a public key that is used to send and receive money. And then behind the scenes, they have a private key, also known as a digital signature, which acts a lot like a PIN. That private key is how you confirm your transactions. Now, there's also somebody involved called a miner, and that miner acts like a bank teller. They approve the transaction as legit and then add it to the blockchain, which is the shared data center. Blockchains are actually really secure because when everybody can see every transaction and every balance and every timestamp, we keep each other honest. What that means is that cryptocurrency is decentralized. There is no one person, there is no one government, there is no one entity monitoring the process. It's all handled by math and an inherent distrust of each other. Now, it all sounds super bizarre. I understand that, but it makes me think back to when the New York Stock Exchange was created. In 1773, it was actually founded in London. And you have to know that our ancestors back then thought the stock exchange itself was some voodoo magic. Back in 1773, most people were still trading a day's worth of work for 2 chickens. Despite the fact that the New York Stock Exchange has been around for 250 years, only 52% of us actually have a direct investment in the exchange. In fact, 1 in 3 millennials still don't trust it. Now, Bitcoin and blockchain and cryptocurrencies have all been said they will fundamentally change every aspect of our lives, but they're certainly not without criticisms or potential downfalls. To begin with, your public key is out there, but it's really hard to tie that back to a person in real life, which makes digital currency like Bitcoin real attractive to people engaged in black market behavior. Secondly, it is open to fraud. That private key is like a PIN number or a key to a safe. If you unwittingly hand it over to a scammer, they can steal all of your money. But cryptocurrencies are pushing forward, and they're pushing for something called an SRO, self-regulated body, where even though we don't have a central government monitoring them, they're going to attempt to self-regulate themselves. Now, you can scoff at that all you want, but as recently as the 1920s, the New York Stock Exchange was self-regulated. It wasn't until the 1930s that they partnered with the SEC and FINRA. Now, as with anything trying to preserve value, there is a limited supply of cryptocurrency. Bitcoin issued 21 million Bitcoins, of which 18 million have already been distributed. But the way the algorithm works, we're actually not expecting to mine all of them until 2140. Now, it may take another 120 years for us to accept cryptocurrency in our everyday lives, but I mean, at least we're not trading in chickens anymore. That's it for this week. This is Jeannie Fisher, the 401k lady.